Welcome back. Final hour session just after 3 o'clock Eastern time on Thursday, September 25th. Markets are basically unchanged for the day. We did gap lower. Everything is red. But market makers did a pretty good job of handling today's volatility. Lots of zero DT flows defending that 65.80, 65.75 zone. We came down to just over the 100% ATR today. We talked about this all this morning in the daily profit plan room. I just posted this thumbnail. Markets are rolling over. Time to sell. No, not even close. But we should be aware that this market has more room to roll over, has more room to fall. And then what key levels should we be watching for potentially buying the dip or positioning for levels to scoop up some really good discounts. Okay, so let's talk about that here. I just wrapped up a really good session in my waterfall income classroom. Waterfall income, we had 2 master classes this week. We did a strategy 1, strategy 2. Took a bunch of good notes today and on Tuesday, so I shared that with members. And also in the, what was I looking for here? Oh, in the classroom. In the classroom, this is a strategy 1 session, strategy 2 session, combo session, putting it all together. That was a couple weeks ago. Strategy 1 session, strategy 2 session. This week, strategy 1 session. Today's recording is a strategy 2 session. It'll be posted by tomorrow. Good notes overall, some new members, and we took another live trade together today. So we have a trade from Monday, a trade today, and I've got a couple more pending that'll also issue for the service if they get filled. They're pending orders right now. Okay. All right. So today's price action, gap lower, market dropped aggressively. This morning we had a 65.50 by 65.45 bull put spread offering $1 credit, filled for $1. Some went lower, some got $1 at like 5 or 10 points lower. But this was the trade this morning that offers up a really nice winner. That would have been in here. So let me use a weapon of my drawing tool. Nope, that's not what I wanted. There we go. So what I'm looking for is getting filled near this low, and this rip to the upside offered that $1 credit was trading down for as low as 30 to 35 cents. So taking, 60, 65, 7% of the max profit this morning, came all the way back down to retest and went to fresh lows, but still defended just at the lows. ATRs for the day, workspace on my daily profit play indicator. We came down based on yesterday's close. We came down just around that 100% ATR. So if you were, credit spread wise, ATR looks like a good spot, gets paid, good spot, gets paid. Where do we settle for the day? It looks like we're kind of settling in here around 6,600 to 6,590. That's where some of my big levels are floating right now. Do we settle in at the lows of the day? Probably not. But if we do, that is a pretty bad sign going into Friday. We do have PCE on Friday. That's the big data point to see where's this inflation going to be? Is it higher? Is it lower? This is the Fed's primary gauge of inflation. So that's tomorrow morning at 8:30 a.m. Tomorrow's another day. So what is looking good is we had in my daily profit play service, we had 4 winners closed out this week on my broken wing butterflies. We had another winner today. So waterfall income, getting new good trades in. Daily profit play, nice week so far. We took a loss on Monday, but Tuesday, Wednesday, Thursday, all winners. And let me see, we're up in for the last couple of trades here. I've got a nice little streak running. Daily profit play winners. Let's go. So from 87, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. I got 21 out of 23 winners. So 21 out of 23 winners, 91.3% winners over the last 23 trades on daily profit play. If I want to go a little bit farther, that'd be 20, let's see here, 24, 5, 6, 7, 8, 9, 10, 11, 12, 13. That's what? 36, 30, that's 35, 36. So it'd be out of 36, we have 33 out of 36. 33 out of 36 winners going back to early September. So obviously it's been a pretty active month so far with daily profit play. 33 winners out of 36 trades. Nice little chunk of profit so far. I am up around $2,500 with daily profit play this month. Not too bad. Not too bad at all. And hopefully we can fill in some more blanks here with another 1, 2, 3, 4 winners that hopefully line up with the tops that we've called. I need price to stay below 66.40. Or I'm sorry, stay below 66.40. I need price to stay below 66.90. So those could be pretty good. That trade is 8.90. There we go. Okay, let's see here. BMNR, I'll take a look at that one, William. Final hour. Yep. Post a new trade for what? New trade for what? I did post a new trade for waterfall income, yes. It was officially in the class alerts. I also took it in the live session today. We did a strategy 2 workshop and posted a live trade. I have a couple pending that if those get filled, I'll make those official trades for the service. But we took a trade live together, got filled for 65 cents. It's a strategy 2. And then a couple more that are pending for 50 cents or $1. So those are all in the live session today. The one that we did take is live and get filled for that one, 60 to 65 cents credit. Okay, double ups. I'm a little annoyed because I was looking at a 6,600 double up today. Gosh, it would have been, it's like got to be close to a monster winner. I was looking at on SPX for today, a 6,600 going 10 wide. It's still not done, but this trade was trading for about 875 to 880 credit. Now it's showing $7. So it'd be another, 100 and some bucks of profit. It's kind of nuts that it's not better than this though. So, or if I went 15 wide, I mean, this is better. This trade was offering like 1250 to 1275. Now it's down 8 and change. That would have been the better trade had I done that for double ups. I just was away from the computer. I didn't take the trade, but shucks, that would have been a nice one. So anyway, I mean, there's plenty of opportunities ahead. It's just it was a good kind of pin level around 66 today. So we talked about that a lot in these master classes. This is what I've been doing for a lot of my webinars is if I'm talking daily profit play, I'm sprinkling in master classes. If I'm talking waterfall income, I'm sprinkling in master classes, news breakers, double ups, pinch point. Okay. I still haven't gotten through my entire list of pinch point trades. I priced out like another 15 trades today. I priced them and I didn't get filled. So I haven't taken a trade yet. I've still got to go through like 35 or 40 more symbols. My pinch point scanner has 9,500 stocks that had me down to like 58 that I'm looking at and pricing out. So I'm not done yet. I'll get more time to do it tomorrow, but hopefully we can find some more trades. So here is my pinch point look. So all stocks, here's what's in my go zone. There's a lot of stocks I got all the way down to about FE today. So I priced out all of these and I'm still going. So I'm still going. OKTA, that might be an interesting one to trade. There's just a lot of volatility on some of these positions, which is good. But some of them, it's the precision of the strike prices or lack of that don't allow me to take the trade the way I want. I want these trades to offer up a bigger reward than risk. And it's very easy for us to have a straightforward set it, forget it, 30, 40, 50% return on risk. That's the way I like to trade pinch point scanner. That's my preference. So I combine this with a combo trade. My scanner, does all the heavy lifting. It spoon feeds me great trades. I teach a variety of strategies. I personally like to go either direction because I'm just looking for volatility. If the market looks like it's at support, obviously a directional bias is fine. But if it's like sitting in the middle of something, it can go higher or lower. I'll take a combo trade that goes either direction. Just get us paid on some volatility. Okay. Bashley says, first time here. Well, welcome, man. Your name is familiar. Are you in the A1 sessions? I feel like I've seen you before. But first time here. Yeah, I do. Usually my sessions are mornings. I'll do a little morning show if there's US news. I run a live session every single morning called Daily Profit Plan. I don't stream that on YouTube. I usually take the YouTube sessions are collaborating with A1 Trading, or I do my own session in the afternoons like today, the final hour session. But if you subscribe to my YouTube channel, youtube.com/Chris Pulver, and click that notification bell, all that fancy stuff, anytime I go live, it's also on my Discord. So if I'm live, pops up on Discord. If I'm live, you subscribe to my YouTube channel, pops up live. I mean, if there was a better way to go live on my phone, I don't know. It'd be weird. I'm thinking of like going Instagram live, but that's just a little ridiculous. But you never know. I don't know how many Instagrammers out there, or certainly TikTokers. If I went live, maybe I can get a bigger audience. It's just who am I talking to? You know, I mean, I'm happy to educate. This isn't like chasing memes. This isn't, YOLOs and diamond hands and chasing fart coins. Like, this is 20 years of trading and educating and trying to do it the right way. Like, I'm not a trader that's going to have 10 baggers and, showcase my Lamborghinis. Like, I'm a trader that's been grinding this crap out for 25 years. So I've got the state power. I've got the track record. I've been managing capital for over a decade. But, sometimes people want the big shiny object, and they want the fancy content that I'm probably not going to spend the time to do. So anyway, but happy to have you here. Oh yeah. That's what I thought. I've seen you. Gotcha. But yeah, I'm live almost every day. So there's usually like a video getting posted. I do a lot of posts for TradingView. So if you subscribe to my YouTube, then yeah, I've got sessions all over the place. I've got plenty of educational videos. I've got a trading 101, keep it seriously simple, strategy session videos, a lot of stuff in Forex, in stocks, equities, options, crypto. I've done some stuff on that. But yeah, people ask, I will gladly post some content. Cool. All right. But this session is free every single day. If you'd like to join me, I do have a link. This is a morning session at 9 a.m. This is for traders that primarily want to jump into stocks and options. But I am trading with a service every single day called Daily Profit Play. Every single week, Waterfall Income. Every time we have like a big earnings season. So coming up in October, we'll be very active on Newsbreaker service into probably October, November. Double ups. I'm always looking for high reward, low risk trades, pinch point every single week, how to hedge your portfolio, and then a bit more discretionary. Some good option education I built out. This is a $27 course on learning how to trade options. I built this for my nephews. They know nothing about trading, and now they do. I built out a full course for $497. So try to make it cost effective. If I were to teach somebody from scratch, knowing absolutely nothing about trading options, this is a good way to get started and kind of accelerate the learning curve. And then you can come into any of these classes and kind of hit the ground running. So, but yeah, I'm live and do this stuff every day. Heavy options is way outside my knowledge. It's really not. Look, man, anybody that's listening here, I knew absolutely nothing about options until like 2011. And all I did at first was I sold some cover calls on stocks that I own, and I bought puts for protection because I got smoked like everyone else did during the great financial crisis. I started really trading full time when I was learning from a currency fund manager. Most of my teeth cutting in the markets was trading currencies. I was in FX back in 2007, 2008. So I was very much a technical trader, scalping, day trading, Forex. But I was managing, a little stock portfolio since 2000. It was just passive investing every single month, finding stocks that I like. The good thing about that one is time in the market. I've been in that portfolio for 25 years now. And obviously, adding more capital, running a currency fund, working with some professionals around the time, like 2008, 2009, 2010. Anyway, fast forward, I'm managing capital for myself now, friends and family. Options that first started out to just protect my portfolio, and then became, there's strategies that allow me to trade this market up, down, sideways, never own the shares of the underlying, never own a single stock, and still generate income weekly, monthly, quarterly, yearly. Yeah, sign me up. So that's the type of stuff that I trade. I don't like to own stocks. I think it ties up way too much capital. I do occasionally, like I own the SPY, I own the Qs and the Nasdaq. So SPYs, Qs, diamonds, and IWM Russell. I do have some shares every now and then of those, but I usually take them and churn them. So if I take 100 shares, I try to flip it for a couple $1,000 and then put on another income-based position. And if I own it again, I'll do it again. So I use those as time to repair, but I like to just generate the income and keep my capital, 50+% liquid. Forex is great. I traded Forex for a very long time. I'm just telling you, like running a currency fund for over a decade, the stress level of a 24-hour market, 5.5 days a week, or a crypto market, 24 hours a day, 7 days a week, or a futures market, 23 hours a day, 5 days a week, 5.5 days a week, I guess. It's a little bit more maintenance. It's a lot more checking. You can look at it like, it's convenience of trading 23 hours a day. or it's the stress of monitoring crap 23 hours a day? I think it's the latter. When I got into mostly managing indexes and stocks and options, opening bell, closing bell, my work-life balance as a trader has been much, much better. So I know that, the market can only do so much in a day. We're going to survive it. Risk capital is the most important thing. Defining risk is the most important thing. Markets can never really break you if you don't let it. When can the market break you? If you have undefined risk out there, where a naked put or a naked call or something where the market can do something really, really silly can get you into a lot of trouble. I saw some really good traders last year during the summer blowout when we had July to August. The market only dropped 10%, but the futures market absolutely blew out the bid-ask prices. And I saw traders that were averaging, 20 to 30% a year on gains that gave all of it back and then some. Like literally a 30% year turned into a hole of 20% because they just got blown out in leverage. So that's the type of stuff that I don't like to do. I don't like to leverage because at some point it hurts so bad when you're wrong that I'd rather just trade defined risk and go base hit, and just take thousands of trades. Okay. So, Forex is great. My style of Forex is mostly, position trading in larger timeframes and larger areas. And usually when I close out for a winner, I close out for, 5 to 10, 20,000 pips. That's not an exaggeration. Example this year, like dollar Swiss was a big winner. Euro Swiss, if we hit like 9,800, that'll be like a 20,000 pip trade. If any of my Swiss crosses will fulfill, I'm just getting positive swap on them right now, but those are all going to be worth like 10 to 15,000 pips. So I've just, over the course of the last year or two, dollar cost average, and I hold these trades. So it comes and goes, but I like an occasional swing trade. I take an occasional scalp, but usually my time frames now, it's funny, I started out as a 1 minute scalper in the euro dollar back in like 2007, and I've evolved into focusing nothing more than like daily, weekly, 4-hour charts. And it's more of like a position building a trade where I'll sit on a trade for a month and have it hit my profit target. So it's supply and demand oriented. It's market inefficiency oriented. Overbought, oversold at good technical, levels. So anyway, there's a lot of ways to do it. There's a lot of ways to trade, and I'm happy to help, whoever wants to learn in a bunch of different asset classes. Cool. All right. So let's open it up to some questions. Any other thoughts on the market right now? I just want to talk about some key levels. Here is let's go. Ideas, Minds, XSP. All right, here we go. So my watch list, everything is down today. This is a daily time frame. I'm zooming out because I want you to notice a couple key levels. So this screenshot, markets rolling over, time to sell. No. Okay. But what I want to do is I want to open up the conversation on where this market could be going. So let's go SPX for a moment. Let's go SPY. Take a look at these levels. I think that right now the bull market, the integrity of this bull market, it is still alive and well. Okay. Now, where does it need to be? Right now in the daily time frame, the SPY, and I think the reason we had that little rally today is because the market did poke that 21-day moving average. Okay. The SPX did also poke the 21-day moving average. Actually, no, I take that back. So the SPX did not, the SPY did. I think that's why we had a bit of a rally today. So probably just, algo driven, quant driven, buy signals by, just shy of that 21, or the SPY hit it. That was a intraday jump. Now what I see is a kind of a gap candle, right? So we gapped lower. We have a big indecision candle. What's going to be really critical next is whether or not this market is going to stay below this level or now have an indecision candle, and we see what comes next. So the market may find the ability to rally back up, but if it stays below 660 on the SPY, okay, if it stays below 660 on the SPY, or I guess 661, if it stays below that, this is still looking to go lower. This FOMC low was right here. It got tested today. So a couple ways I'm looking at this market. Are we going to do something along these lines? Is this market going to use a little correction down to the FOMC candle, back up to the highs, back down to the lows, back up to the highs? Are we going to have a couple of maybe 30 to 60 days of slow where the market just doesn't go directional? It's very possible, right? I see this market either holding support around this 65.50 handle. There's also a big gamma pin at 6,500 SPX. So it's around 652 or 651 SPY. But if we hold this support, I don't think it goes higher than 6,700, which is our recent highs. But if we break lower, this either goes sideways for, let's say, the next 30 to 60 days, which after going all the way down for a 20% correction, going all the way up for nearly a 40% correction, sideways would make some sense. Okay. But as long as we don't break these lows, this market just kind of finds support. And maybe by the end of the year, we're sitting at the highs or slightly higher by the end of the year. If the market has a strong Q4, this could be good. Okay. If the market goes a little bit lower, we have to be prepared for this to stall. Okay. If it stalls right here, we go down, we pull back and stall, we flush down a little bit lower. This is the bar count that I've been talking about, this 50 period moving average, which is almost a 4% correction from the highs. A 4% correction is a very healthy pullback after a 40% rally or nearly a 40% rally. It's also nothing. Like a 4% pullback is nothing. It is just offering some good technical support. So if you take a look at these dynamics, 50 period, 100 period, previous all-time highs from February 2025, pullbacks into the 100, 144, 200. This green line, I talked about this in my afternoon class today for waterfall income. This green line is a monthly 10 period moving average. It's a really simple macroeconomic, or it's just a macro indicator that I use on higher time frames. The 10 period monthly or the 5 period yearly. This is a time to say whether or not I should be, aggressively bullish or looking to be cautious. If price comes down to this level and does not turn up, it is time to be cautious, because below this 10 period monthly moving average, the market can go indecisive, and that next leg lower can be very, very painful. If you watch this price action, below this, caution here. The correction doesn't hurt you because you realize there's no reason to be bullish if it's below the 10 period monthly average. And yes, you missed the dip as far as timing this bottom, but when you got above it, this market's been nothing but rallying since. So it's offering lots of support. It's just when we're below it, we need to be cautious. And if we continue to flush lower, you shouldn't be as affected as everybody else, because you'd be sitting in cash, you're diversifying, you're looking to be somewhat bearish on the market, at least in the near term, and you kind of ride this thing out, right? But I'm hoping you can see here that there is a lot of dynamic support still built into the market. So do we end up going sideways near the top and rolling over a little bit? Do we just continue to flush down to this 50 period, which is over 100 bars, by the way? So the last time we tested this level was back here in late April and early May. This is now over 100 bars. I ran this through, I think I ran this through Grok. I asked about how many bars is average. It's like 24 bars on average on the 50-day. What's our longest extended move in the last 30 years? 102, 105, 112, and 128. Those are the top 4 times that the S&P has been above above the 50-day moving average without pulling back to find it. So we're into the, that, like I said, that like 102, 103 range. We're into those like top 3, top 4 all-time stretch away moves. And I just think that a pullback is likely lined up. So, we're on the verge of the U.S. having some pretty bad news. We've got a government shutdown lingering. Does it happen? Does it not happen? It's not going to be good, right? We're already struggling to see a rosy outlook on labor. Right now we're in, as Jerome Powell said this week, a low hire and low fire labor market. We have PCE coming tomorrow, so we could see stickier inflation. The Fed, it's interesting on the watch tool this week. So the big change is we're still likely going to cut in October and likely cutting in December. However, you can see that these are way different than what it was during the FOMC. So this is now like 1, 2 more cuts, which gives us 3 for the year. But that 4th and 5th looks very different than like 6 or 7, So, and also like this is completely up in the air. Like from September 2026 to literally October 2027. I mean, these percentages are so close, we could have like a bigger pause in this area, or we can have like, more cuts sprinkled in. So this is like the Fed just kind of showing us in the futures market, wait and see. And I don't think that's what the market wanted. The market wanted like a clear cut path of Fed's going to be dovish, Fed's going to cut rates. And the market hasn't really budged. Look at the yield market. Okay, 10-year yields are up since the Fed rate cut. This is one thing that I warned about, and I'm not saying it's going to rip all the way to 5+%. If it does, we got bigger problems. But this is when the Fed cut in September of 2024, and the market did the exact opposite yields. So they cut rates and yields went higher. They cut rates, our yields going to go higher. Well, if they stay between 4% and 4.5%, that's not really, a huge threat to the market. But it's not improving the long end of the curve. So debt-wise, it's not going to be better. I mean, trying to buy a house isn't going to get any better. I saw that some of the interest rates today came out. The average mortgage has gone up from 6.26 to now 6.3. So we're not at a sub 6% mortgage, not yet. I don't know. It's kind of a big wait and see. And this is annoying. Like month to month, it's annoying. So anyway, I'll move on to the stuff. Let's go dollar index, gold, oil, silver. Dollars caught a really nice bid. If you follow me at all the last couple of months, I was very cautious of selling the dollar into these lows. In fact, I thought if we hit this low, that's a great time to buy. That's a sucker's bet to be a seller. I thought this is a great time to position for dollar long. So euro dollar selling or pound dollar selling. This is a great spot on the DXY. Caught a bid here around 96.50. It's up to 98.50. I think this has room to come all the way back into the 100s. I think we get to 100 plus. So I like staying long the dollar. I'm hoping if you got into the trade, you kind of got in during FOMC or shortly after. And so far, it's looking pretty postured to go up. Okay, oil. Oil. I'm actually going to look at a trade here on oil. Let's go. So this is all like futures contract stuff. I might trade CL. Let me see what I can get on CL for futures. So right now, my trade in futures goes out to, it's either December or January. Let's see here. So if I go out to my futures trade, this trade's up 140 bucks. It maxes out around $220. I'll probably keep most of that profit. If I can take it for maybe, 210, I'm happy with that profit. 205, happy with that profit. So I'll try to take like 85 to 90% of that max credit. This is December 16th. Let me look at a futures trade here. That trade has been open for 100 days. So I did this like middle of the year. Maybe going out to like Q1. Let me look at this trade. If I go out to March, April, let's go maybe April. Okay. Can I build a trade here? Like deltas aren't super, super big, but if I did a 50 by 49 by 48 by 46, this is going to give me about, it's a $900 risk. Maybe I'll tighten this up a little bit. That's a profit trap of 500 bucks. That is a $160 income, $220 income. I'm going to tighten up this match risk a little bit. So that's 1320, 890, 110 bucks of income. Probably take this trade. So this is $190 of income if I get filled at 19 cents credit. I'd like 20 cents if possible. That'd be $200 in the trade. Max risk of about 1,200 bucks. It's less than 1% in a lot of my accounts here. Buying power, futures is usually pretty capital efficient. So it requires about $300 of buying power. Let me see if I can take this trade for 20 cents. Try this trade here for 20 cents. Send. Pending. Try this one. Hello, Bueller. Where the heck did my trade go? There it is. So, yeah, where the heck did that trade go? So there it is, 20 cents. I guess if it gets filled, it's fine. Let me go back to this setup here. So 84% probability of profit. I have a profit trap of 500 bucks that gives me a max of 7. I'd like to trade for 20 plus cents. I'm going to go, let's see here. Could we drop a little bit lower? Let me tweak the parameters here. Let me cancel this trade. I'll cancel that one. Let me go back into the options chain. Let's find something different. That is out to April. Let's go May. Similar mechanics. 50. That's $1,000 profit trap. 48 by 46. So that's a $500 profit trap. A little bit better. Kind of the same thing. $700. Let me take this trade for, that's a max of 1,300. I don't know. This is going to be a pending order. So I'm going to put this one in for, let's go 20 cents. I'm going to go 20 cents credit. Good till canceled. So this one has not filled yet. So buy power is only $217. I'll put it pending at 20 cents. Okay. So right there, out to May, 20 cents is trading for 10.11. I'll just let it marinate. If that gets filled, then I'll issue this for an official alert. This will be probably part of my Project Options Edge service. Okay, so let's look at to see if CL will stay above 50 bucks. So chart alarm is here. I need to stay above $50. I think that it will. You know, this might still offer some structure. Let me go back to oil for a second. So if we stay above 61 and change, I mean, oil has pressure to possibly come a little bit lower, but I think there's going to be a pretty firm bottom here around like the 55 handle. I don't think oil goes too much lower than 50. I also think that oil is going to be suppressed and not going too much higher either. You know, this recent run, we've been making a series of lower highs and lower lows since 2023. So I don't see oil making a huge breakout. You know, and this is modified. I mean, originally we had this trend line and it got really noisy here, really noisy here. So I'll make a slight adjustment to there. So I just see oil going back and forth, right? So we have a strong low. We're making lower high, lower high, lower highs, lower highs. I mean, if it catches a bid, I could see this. I could still see it playing out here. But eventually, this is the crazy part about oil. Oops. If we get a break, if this is like a big wedge and oil breaks to the upside, yeah, I see that's more likely happening, especially if we're like unleashing all this demand in oil for, you know, building things, this AI build out, data centers, the energy to do it. There's all sorts of ways to play, like the hardware side, the physical side of building out AI. And I think oil has to maintain a bid. You know, it's unprofitable to have oil below 50 bucks. It's also, you know, a price shock if it's above $80. So it's constantly, you know, in this like supply and demand range where I think it's very, very heavily manipulated on geopolitical tensions and supply and demand. So, you know, it's just a trade, but I'm going to see if I get filled for something that offers up a worthwhile position. Okay, that's oil. We did dollar index oil. Let's go gold and silver. Okay, gold is just off of all-time highs. I like all the pullbacks. Actually, if you're following me along with A1 Trading, the Pulver alerts, I put in a series of trades on GLD at basically every moving average. So little bite size, like $500 income or $1,000 positions where I'm going to allocate, you know, 3-4 shares and just take a chunk of shares all the way down to these support levels. Gold has been in a fantastic bull market. I think that it is clearly being recognized as a true asset. If we have a, you know, monster rotation from fiat into something of value, I think this has been one of the biggest bull markets and one of the biggest changes to everyone relies on debt and treasuries and fiat to now, if we're going to rotate into something like gold as a standard or peg, you know, global trade to gold again, I don't think this stops going up. But I think we need to have a pullback. We've had a very, very long bar count since 2023. It's almost 2 years since we've hit a 200 period moving average. So I think we have pullbacks coming. I hope it does happen. And so I'm looking to scoop up some gold at any of these dynamic support levels. Same thing on silver. Silver is running to all-time highs or close to it. This is a 2011 and 1980 all-time high around 50 bucks. I do have a pretty good chunk of positioning on SLV. and I'm likely going to take some profit there. So right now my silver position is, okay, let's go broker. It's being a little slow. There we go. Silver position should be up like almost 70 grand. It's up $82,000 on SLV. I'm going to end up closing out my positions here. That's a good chunk. I have a fair amount of shares. 2, 3, 8, 14, 17, 18, 23, 25, 28, 33. I have 3,500 shares of SLV. So 3,500 shares of SLV, closed it out around $44. That's $154,000 of credit coming my way. Obviously the cost of the trade, but percent return is like up 40, 50%. I'm going to take that profit and protect it. I'm still going to keep an allocation. I want to allocate more to silver, but I'm not going to shortchange myself on these profits. This is another one that if we hit my target, this is all-time highs, I'll take the profit and then get pullbacks and try to reallocate my 5-10% position to silver. I think it's a good thing to have in a portfolio, but I'm not going to forfeit those profits. Okay, I think this is a great spot to be a trader. Take the asymmetry, take the run we've had here for the last couple of years. Silver's been a very, very slow grinder, but now it's kind of off to the races, and it's been outperforming. What a freaking pin at 66. Darn it. Sorry to my double up students. I should have taken that trade at 6,600. That was a 10 to 15 wide, and that thing is worth $1,000 today. Damn it. Oh well. No, there'll be more. But anyway, silver into all-time highs. Here is the XAG chart. All-time highs around 48, 49. Zoom out on the weekly time frame, and all the way up here towards like 49. Go back to the 1980 highs back here around 48. So this run into these alerts, test the 1980 high, test the 2011 high. Protect some profits on SLV. Spot prices. Last time we were here, all the way up to 48. Like, how good would this be? This is the 2011 high. So even if I'm getting in this within like I measured this move. This is a low to high breakout pattern. If we measure this back to the previous highs, it's like, give it to me. So between 44 and 47, I'll put a chart on here at 47. Between 44 and 47, great spot to be taking some profit. And once that's there, I'll look to trim the gains, trim the size, and then also reallocate. Okay, Bitcoin rolling over a little bit. I still think Bitcoin is a buy the dip. Some levels to be aware of. Look at your moving averages. We have a 200-day moving average here. A pretty simple trend line would be just wait. If you're wanting to get some confirmation, wait for it to break that trend line. That way it can just continue to slide if it's going down here, down here, down here, down here. But there is a bullish trend line offering support, bullish trend line offering support. We break above, we head to all-time highs. I still think with a risk appetite rally, Bitcoin can easily catch up and hit all-time highs again. And I've got this thing measured out with a fifth wave pattern up to like 130, 132. So I think Bitcoin still has an up trade. It's just, be patient right now, or if you're looking to buy this thing between like 106 and maybe 95, but this outer trend line, in anything under 100 grand is pretty attractive. 100 to 92 is very attractive pricing for, anticipating a bottom, but obviously the clean trade is on the right-hand side of the trend line and then taking it back to all-time highs. Okay, the 50 weekly, let's go to that one. That'd be great. So we're at the 21 right now. The 50 weeklies are on 97. I love that too. Look at this thing. Tested the 50 here, tested the 50 here. Great spot. Yep, it's around 98,000. Like I said, anything under 100,000 is pretty good. There's a nice trend line, starting at these lows from 2023. That trend line looks pretty solid. So I think if we maintain this bullish posture, anything under 100, I'd say between 100 and 90K, that's a great spot to be dollar cost averaging into Bitcoin. Hopefully hitting all-time highs again in the near future. Whether it's end of this year, whether it's first half of 2026, I don't know. I'm just saying this remains an asset in my portfolio. Not bad. Okay, we just had closing bell. Would you consider doing spread ratio on IBIT? I do have a couple in already. I've got a stack of naked puts on this one. So I'll show you a couple trades that I have running. So IBIT, I've got some trades in for my Project Options Edge. I have some shares. I do have some positions here. So protected puts, that's a bull put spread. Naked puts. So I did this, like I went pretty far out of the money here. This is up 77% of my credit. I can pull in $471. I'm up 362. Bull put spread, naked put combo, same thing there. Bull put spread, naked puts at 55. Yeah, I mean, I'm good with some naked puts, some ratio spreads. There's all sorts of ways to do it. Look at IBIT. Where do we pull back to? Well, on the daily time frame, maybe something around this like 58 to 56 zone. I have dollar cost average ready to go. You know, if this just keeps pulling back, so does it pull back to the 200 moving average? Maybe. Look at this as a trend line. There's a trend line. Does it bounce and go back to all-time highs? So, like I said, the safe trade would be, you don't have to call the bottom, right? You don't have to call the bottom. Just draw a trend line right here and let price prove it. Because that way, if it stays on the left-hand side of the trend line, you don't get in too early, right? But just be aware that there's probably some likely bounces in here. But once we're on the right-hand side of the trend line, it's kind of like bullish confirmation, permission to get back in. But I just think on the higher time frames, there's some pretty good structure down here. This would be around, I really like this like 58 to 55 zone on IBIT. 58 to 55. Okay, BMNR. Yeah, I'll take a look at that one. BMNR. Is this it? BitMine immersion. I don't even have a feed for it, dude. I don't know what's up with this scale. I don't know. So I'm assuming it's a mining company. Conglomerates, finance, blockchain tech, industrial scale digital asset mining equipment. I don't know, man. Here's my take. If it doesn't look like the spot price of Bitcoin, I don't really like it. I've traded Riot, I've traded MARA, I've traded some other ones that were supposed to be like, oh, it's mining, it should correlate with Bitcoin, and then all of a sudden it stopped correlating with Bitcoin. I look at this, and that's my biggest concern: is what happens, with like more halving, more cycles. I have no idea. If I want to trade Bitcoin, I can read this chart. If Bitcoin goes higher, I do not know if BMNR is going to go higher. Bitcoin has made all-time highs for the year, and look at MARA. Freaking garbage, And I've made money on this one, but look at BITO. This doesn't look like freaking Bitcoin. So that's my concern. If it doesn't look like the spot price of Bitcoin, same thing on gold. Gold miners up 100+% for the year. Gold up 40+% for the year. If I'm trading something gold or miner related, it better look like the spot price. So that way, if I'm right on price appreciation, if the underlying asset like spot price gold goes up, I should benefit from that price appreciation. If the spot price of Bitcoin goes up, I should benefit from that price appreciation. BMNR, I have no idea. So is there a benefit to like holding BMNR? Is there a yield to that one? I don't know. That's the stuff I'm skeptical of. I just think there's so many derivatives right now in the Bitcoin space. I think that's a big reason that MicroStrategy is down. I mean, look at this drop in MicroStrategy, right? After buying 850 coins for almost $100 million, shareholder dilution. I mean, it's crazy what's happening. And this is, we saw this last year, like 2 to 3 times leverage Bitcoin. That's essentially how it's behaving. So Bitcoin is down. Look at this. This pullback on MicroStrategy. This thing's down 34%. Bitcoin is down maybe double digits. Bitcoin's down about 12. So you're talking about like a 3 times risk on MicroStrategy. But it also is the same way. Like if Bitcoin goes higher, MicroStrategy benefits. Well, this looks good. But there's all sorts of weird stuff with MSTRY and Strike and whatever other financial derivatives they're putting together. It's risk-defined trades. Like there's no way to get super speculative on this stuff. But if we get a read on Bitcoin, I can analyze that chart. I try to trade things that are correlated to that spot price. That's a much easier chart for me to read. Okay. So like I said, you can look into it. If there's a yield factor to it, I just don't know. But if it doesn't look like the spot price, I'm not that interested. That's just my 2 cents. Okay. Anything else currency-wise in the day? It was really just a day of the dollar. Here is the dollar bid. We had a pretty good volatility push. Dollar up very strong today compared to others. Swiss was weaker than its baseline. Swiss and yen together. New Zealand weakest, pound weakest, Aussie weak, Euro weak. New Zealand the Swiss and yen together. CAD and dollar up a little bit, but dollar taking the big noticeable win today. So this is why I said like dollar index, just trade the dollar index. I think this has been a good spot to buy the dollar. Likely going to catch a bid and stay bid. If the dollar stays bid, the equities market will probably continue to roll over a little bit. TLT, I'm glad I got out of this trade. I'm taking the profits I had. I was long TLT since these lows around low 80s. And it was profitable enough that I'm taking the allocation and putting it into gold and silver. But I'm out. Like, I don't want to be in TLT. I think this is the melting ice cube of an asset that is just going to be tied to fiat. And at some point, it's going to look less and less attractive compared to something else like gold. Now, there's basically like a synthetic plan to buy treasuries and buy bonds, and that is called stable coins, which is this Genius Act that's been passed. So I think that's a creative way to try to get more people to buy treasuries, but I don't think this is anything other than stable versus a price appreciation. I think if you're lucky in TLT, you see prices just stabilize here, and it's like a $2 to $3 to $4 range. That's about it. What you don't want to see happen is we have a complete freaking break and collapse in the bond market. You talk about volatility that nobody sees coming. The bond market flinches, the whole world's going to feel it. So I think if anything, keep the bond market stable. I just think it's something that you're going to see more and more investors moving into gold outside of U.S. treasuries, U.S. bonds. So anyway, all right, it's 4:10. I'll wrap it up here. Final hour, closing bell. Overall, tail of the tape as the market was down on the day for gaps lower, but it finished the day pretty much flat. So we gapped open here, finished right around that 6,600 pin. But yeah, I mean, market makers did a great job today. Lots of volatility. This was down 0.4, up 0.6, down 0.7, up 0.5. Like, what a crazy volatile day. Down and then up, down again, then up. Tomorrow's another day. PCE in the morning at 8:30. That is, let's see the news here. Bloomberg forecasted for PCE is a 2.9 core and a 2.7 year-over-year PCE headline. So if this is higher, we'll find out tomorrow morning. If this is higher, we'll find out tomorrow morning. This probably will affect, at least on paper, the optics of what's the Fed going to do. If they see like stickier inflation, stickier PCE, it probably means a bit of a reluctance to see like this super dovish outlook on the Fed, but rather they're going to cut kind of by necessity, a weakening labor market, like Powell said this week, a low hire, low fire job market. If you have a job, you are kind of keeping your job, but tech is not hiring, and tech has actually been laying off people since 2022. But that's tech. All the jobs that are coming in are in the healthcare service. Healthcare services, hospitality, tourism, like that's where jobs are at. It's a lot of healthcare education, nothing else. So, all right. Appreciate everyone being here today. Thanks for joining in for the final hour session. I'll be back at it tomorrow morning. If you'd like to join me tomorrow morning live, I'm live every day at 9 a.m. I'll also be on the A1 trading session tomorrow morning at 8:30. Nick and I will jump into a little collaboration with PCE News. And then I'll jump into my daily profit line session at 9 a.m. All are welcome to join. I appreciate if you're watching today, click that thumbs up button, subscribe to the channel. If you want to join me every single day, that's great. I've got streams, got videos, I got content. I post on YouTube and TradingView and Twitter, LinkedIn, freaking Twitch. I mean, it's whatever. Facebook. All my videos are out there somewhere. So anyway, if you'd like to join, here is a link to my. Let's go. If you want to join me for my live sessions in the mornings, here is the link right here. So this is daily profit plan, weekdays, 9 a.m. Eastern time. There you go. Okay. Thanks, Bashi. Appreciate everyone being here. And let's come back and do it again tomorrow. And more importantly, besides all this market stuff, is Ryder Cup starts tomorrow. So let's see who's going to take the cake at Bethpage Black. U.S. needs 14.5 points because they are coming in as the losing team from the last Ryder Cup in 2023 for all the golfers out there. All right, everybody. See you tomorrow. Thanks. Bye. Weekdays 9 a.m. I just said it in the chat. This is a weekday, so every Monday, Tuesday, Wednesday, Thursday, Friday at 9 a.m. Eastern time. So you click on that link. My Telegram is a free channel as well. So if you'd like to join me, the link is posted every single morning in Telegram. Pop on in. Okay.